Hello, and welcome to another episode today of our podcast. This is Shari McGuire, the Realtor, and I'm here today with Olivia Eggen with New American Funding. New American Funding and Olivia are one of my favorite lenders out there because they're my get the job done lender, not only from the beginning, but if I have someone on the other side of the transaction, like I have the listing, and the buyers are falling apart, I'm like, hey, can you guys solve this? And if the buyer is willing to move over, they can get the job done. So definitely give New American Funding a call. But anyway, so I just wanted to bring her on today to share with you some things about innovative mortgage options that are out there. And there's things that you can consider with reverse mortgages. That's actually changed a lot. When they first came out, there were a lot of bad things about it, but now they've changed things and we can talk about that. And then we'll get into some other kind of programs this time. So welcome, Olivia.
Hi, thank you. I appreciate that. I'm glad to be
Yeah,
here.
my pleasure. Good to have you. So why don't you talk to us just a little bit about yourself, like who you are, what your background is, and we'll go there.
Yeah, absolutely. So my name is Olivia Eggen. I have been in mortgage now for about 8 years. I started as a loan officer assistant for a short period of time, for a year. I was licensed during that. And then I was at a company for 2 years. I came to New American Funding, which is a privately held company, which makes it very cool because we actually keep our mortgages in-house and service them as well. And we do not sell people off. So in the future, when you have questions about your taxes, insurance, or anything in between, you can just pick up the phone and call me. So you don't have to actually call a servicing department, which makes that pretty cool too.
Yeah.
So as on a personal level, I am married. I have a 3-year-old. I actually have a baby on the way too. So I'm in January. I know, very exciting. So that's exciting news. But besides that, we live in Maple Grove, and I play a bunch of pickleball and travel and cook, and that's about it. So
Well, that's cool. I didn't know you were pregnant, and that's one of the things about being remote. We don't see that baby growing inside of you. So congratulations. That's very exciting.
yeah.
So, oh, very cool. So why don't you get one of the things that we are focused on here is the 55 plus, 62 plus kind of audience, and the people that are kind of, their kids are grown and flown. They got the big house. What do we do with it? Should we downsize? What should we do now? What kind of housing should we look at? And one of the things to look at then is, you've got this home with all this equity. How do we move forward with that and buy a new house and not like start over again? So one of the things that people look at then is the reverse mortgage, right? And so why don't you tell us about that and tell us about like what it was originally, what it is now, why it's better now.
Yeah. So, well, there's a few different things. So obviously when we get older, the main thing is that a lot of people are very payment sensitive. So you want to really focus on payments and how to make that acclimate, or like that basically be affordable in your life. So oftentimes people, will talk about qualifying status, and it truly doesn't matter really what you qualify for if you don't like that monthly payment. So we start there. When it comes to reverse products, a lot of things have changed over the years. Mainly in 2008, when our market shifted quite a bit, there became a ton of rules and regulations around every piece of that. And so I think that reverse mortgage got a pretty bad stigma back in the day. And now that has really changed, and it allows people in their later years to be able to purchase a house. Let's just say you're in a $500,000 house, right? And that house is free and clear. You paid it off, and you have $500,000 of equity. Well, oftentimes when we think about downsizing, that doesn't necessarily mean that the purchase price is going to be less. So oftentimes you can get into single level living or an older community, and we'll just say that purchase price is now $700,000. You're like, oh my gosh, I don't want to go back to having a mortgage payment. Well, that's exactly what reverse is. Okay. And so you can get into a new property. You can use your current equity in your current house, right? And you can offset that. So you're no longer going to have a mortgage payment. And it can actually also help you with the taxes and insurance so that you don't have to pay those each month as well. So that's what reverse has kind of changed into. And now there's a lot of, like we were saying, there's a lot of regulations and guidelines around it. So you do have to do counseling, which is just over the phone. And it just makes sure that people are right sound in mind, but then also it includes the family on the transaction. So if you have, sons or daughters that would like to know exactly what you're getting into and they want to make sure it's a good product for you, they can also be involved on that. And there's people that will show you schedules, and there's a lot of terminology and documentation that has to be reviewed and signed in that process, just to make sure that you know what you're signing up for and that it's a very good decision and that your family agrees with that.
Okay, that's a lot of protection in there for people. So let's walk through this a little closer. So you mentioned like someone's got a $500,000 home, they own it free and clear, and we just want to worry about taxes and commissions and all that kind of stuff. We'll just say they close and they've got $500,000 cash. Now they want to go buy the $700,000 home. How does that work for a reverse mortgage? What does that look like?
Yeah, exactly. So there's a few things that it goes off of. Normally, one person in the relationship, so if you're a married couple, one person needs to be of 62 years of age or older. The other person does not have to be there quite yet. So depending on your age, they will do an amortization schedule showing like, okay, here's the expected, life expectancy. This is how much money you have in equity. And this is kind of how this would work. So depending on the purchase price, let's just say it's $700,000. Generally, they'll give you, you're going to put that $500,000 down. Well, you have quite a bit of money there that allows you to basically not have a mortgage payment for the time that you're planning. So like for like the next 30 years or 25 years, that might be. And then is what they do is there's a line of credit for the difference. So it's usually like 50% of the property, and that additional $120,000, $150,000 that you have sitting there would be in a line of credit. Well, that line of credit is actually going to make money each year because it's invested in a sense, and you're getting returns of about 8.1% on average.
Okay.
So in that 8.1%, you're actually pulling your taxes and insurance from that money, that line of credit, as well as it making money for you at the same time. So it's kind of confusing, but essentially you can look at it as like a partial piece of that is working towards you on your behalf of your taxes and insurance. The other half of it is actually being invested on your behalf and continuing to grow as it sits there. Okay. And so truthfully, that's how you kind of offset those things. But then you can wrap in the closing costs and commissions as well. So that way, then you don't have to have any money coming out of pocket in order to buy that new property.
Okay. And so then they're assuming that you're going to live like 30 years or whatever. And so if you were paying on that mortgage, you would pay it off for those 30 years. But now you're just getting to take the money out and use it down to just having, like 20% as equity in there? Is that kind of what they're doing?
Yep, exactly. So instead of you making a mortgage payment each month and paying down the balance, you actually put a large sum up front, right? And it's lowering your borrowing against your loan amount, essentially, if you will. So as the months go on, your loan amount potentially increases, and at that time, then the equity diminishes, right?
Okay.
And so the thing is that a lot of people have questions on that. They're like, well, I really want to leave some money for my family. I really want to, have my kids have something when I pass away. And that's exactly what is wonderful about this is you can set it up that way. So if you're like, I don't want to tap into 20% or 30% of this, I want to make sure that my kids have that. You can do that and say, I don't want to tap into that equity, right? Okay. So if that were the case, then let's just say taxes and insurance on that $700,000 property are roughly like $850 a month. Okay. If you have the amount of money there in that line of credit to pay $500 of that, then you would be on the hook to pay the other $350 right out of pocket. So you could still take a percentage of that, use it towards your taxes and insurance, and then you'd have just a small payment, that you can do. The other thing is that there is no prepayment penalty. So if you came into a large sum of money, whether it's going to be like you sold a business or you got a large payout in your retirement, or you got, you won money at the casino, whatever those things are, you can go ahead and apply that towards your reverse mortgage, or you can pay it off. So so you have all access to doing all the same things, and you can kind of play with it as you please, but it gives you a lot of financial freedom, right, to live your life accordingly and to be able to do what you would like with it.
And do they limit you to how much you can take out each month?
So in that line of credit, they'll give you prorations of like how much money you have access to. And you'll talk about that with them as like advisors, essentially, of like how much money you have access to, if you can pull out a lump sum if you want to at certain points. But it all depends on how you set up that loan, essentially. It's all based off your parameters. So if you have, certain expectations and certain things you want to do, well, they're going to help and guide you into that direction. So that way, then how much money you have access to, how much money you're responsible for, then on and so forth.
Okay. And how about interest rates on that? How does that compare to just going to get a 30-year loan?
They're pretty similar, actually. They're about 1% over market. So,
Okay.
yeah. So, I mean, when I was talking about it, we have a whole reverse department that specializes in these loans. But today, I think it was 8.25, right? If you're 55 plus, because there are some specialty products there, and then 7.625 if you're 62 plus. So depending on your age comes a little bit into factor, how much money you have down comes into a factor. But there really are no FICO or credit scores that are required on this product. So it really, the options are endless, I should say. And the fact that you don't have to fit a specific box in order to qualify for this.
Yeah. And what's interesting too is even if it's 8%, well, the amount you owe right now is this much, so 8% of this much sure beats 8% of that 500,000 or whatever you would outright buy the house and put a certain percent down. So it's a lot different. The interest is less.
Yeah, that's a great point. And that's the other thing too, is like, instead of going with a normal 30-year fixed loan and pulling that money from your investments, right? That percentage is oftentimes quite a bit higher when you're pulling from your investments on the taxable dollar that you're going to pay, as opposed to doing a reverse where you don't have to owe any money, but you're paying 8% on on the cash flow that you already exist. So
yeah. So is that money that you pull out, is that taxable income then?
The money that you pull out of your loan funds.
For your reverse mortgage, from your
that's a very good question. I would assume so, because most interest payments are going to be tax deductible, but because it's your own money free and clear, that'd be a great question for your tax advisor.
Absolutely, that makes sense. And then I wonder if too, like, this helps people if they're like lower, their income is less now that they aren't working, and being able to qualify for property tax refund. I wonder if that helps them too, but that's a tax question. So talk to your tax person about that. But, it's all really good things to think about, because that can make a difference. And I love that you mentioned the investments, because let's talk about some of the pros and cons that people talk about with the reverse mortgage, because I imagine pulling out of your investments, there's pros and cons to that, but if instead you're getting that equity out of your own home, that could be a whole different ballgame.
Well, yeah, that's the nice thing too, is because like when you talk to different people and their investments that they have, whether it's Social Security, obviously you get benefits the longer that you wait, right? Or if it's like Roth or dividends or whatever it might be, there's time limits on a lot of those things. So if you're looking to move, let's just say right when you're 62, right, because you're going into those retirement years, and this is a great product to help alleviate that. Well, then let's just say that one of your annuities or something comes into full, and then you're like, okay, you have to take this disbursement or you have to take this money. Well, that's a great time where you can go ahead and either reinvest that into the market somewhere else, or you can go ahead and apply it to your reverse, right?
Okay.
So it gives you some flexibility in that time span as well, so that you can make your money work for you, right, in a bigger way than just being forced into taking out like a 30-year mortgage or something else where you have to pull that down payment or additional funds from. This doesn't have the same qualifications for, like I was saying, credit score, and then also for income, because you're going to have such a large amount of your own cash involved.
Okay. So what about, shoot, I just lost my thought. So what are reasons that people say, you know what, this just isn't for me? Is there like certain things that you're like, this isn't a good fit for people usually?
Yeah, I mean, I think it's all personal, right? But if you're like, I did have a lady I was talking to not very long ago, and she's like, I just really want to leave every dollar that I possibly can for my children, right? And I talked to her son, and he goes, I don't care at all. I just want my mom to have a happy life and be in the spot that she needs to be. And so when we had gotten through this over time, she was like, I just don't feel comfortable pulling against my equity when I have access to other funds. So like in her case, basically diminishing her equity was not something that was on her forefront. She instead just took out a small 30-year mortgage and just paid it back as fast as she possibly could, because in her mind, it just made more sense, right?
Okay.
And so that's the thing, is like, it just depends on the person, and kind of depends on what your goals are, of what you want to accomplish. And so I truly would say, like, everybody's a little bit different. It's just a great option that's out there. And I think is what a lot of people, maybe like our old train of thought was really, this is to borrow against your own property, right? And so if you're living in a house and you're like, it's free and clear, but I need cash flow. So you can use it to basically get a payment each month, right? So somebody could say, I'm short on funds because life is so expensive. Groceries and gas are so expensive. I'm going to actually get a payment back out of my house to help supplement my income. You can use it like that. But you can also use it for purchasing, like we were just talking about. And that was, I think, a big thing that has changed now is that it makes purchasing a new home so much more affordable and obtainable for people that have been kind of sitting stagnant for so many years.
Okay. Now, what about if you've got the reverse mortgage and you've been living there now another 5-10 years, so that the home is now worth more in value? So do people renegotiate their the home equity that is there and kind of like redo their mortgage, refinance their mortgage, I guess you could call it?
Yeah, exactly. So you can go ahead and you can have a conversation with a reverse specialist, the same people that would help write your loan. And they will basically go back over the numbers and see how much additional equity is there. So if you need to utilize that reverse product in a different way, and maybe either pull more cash out or change your funds around, they'll help you do that. So it's kind of like a readjustment or, recasting of your own mortgage.
Okay. Yep. Interesting.
Yep, exactly.
So many things. So that's one thing that people can do, but there's other programs and ideas that people have that's beyond just your traditional, typical 30-year mortgage. You mentioned something when we were talking before we started called NAF Cash. And so why don't you tell us what that is?
Yeah, so New American Funding Cash is a very cool program. So our owners put up their own funds, and they usually have an account sitting there. It's got about like $3 to $4 million, allowing our clients that are good conventional clients or VA clients, either one, to go ahead and purchase in cash. So what this allows people to do, because we're kind of talking about that 55 plus market, is that oftentimes people have lived in their homes for a long time. And they're like, oh, we need to downsize. We don't need this big of a house, but we want to find the right spot. And a lot of people get nervous to go ahead and list their property before they found that new home, right? And so is what you can do with this program is you can go ahead and find your new property in your new home and go ahead and purchase it with cash, with somebody else's cash, essentially, and only hold one mortgage at one time. So basically what that means is like, all right, we'll say that we'll take Sherry, for example, right? We're going to say Sherry lives in a $400,000 house. And she is, she's lived there for 25 years and has a lot of trinkets and a lot of things. Okay. But then you're like, okay, I really want to go and find that single level living property. That's going to make a lot more sense for us. So in this case, you go and find that new property. You're like, yes, this is it. You go ahead and purchase in cash, which allows you to, one, win in multiple offers, but two, not be contingent. So you don't have to, yes. And that's huge in being competitive, is that you don't have to be contingent on the sale of your own home. So in that case, then we bought, so New American Funding would be the owner at that point. Sherry can move all of her belongings into that new property, which means that all the stuff that you've had in your house for 25 years now got out of there, and you can list that property in better condition because now it's clean, it's pretty, you maybe repainted or did some carpet or whatnot. And so you're going to essentially hopefully make more money on your listing, and two, have the convenience to move your items as need be, right? So after you move all your items into your new property and you're living in there, you sell your existing house. Well, now you just have a one-time close on that new property where you're buying it from New American Funding. So it's quite wonderful because it alleviates a lot of the stress of moving your belongings. And then now you can also make more money on the sale of your house.
Okay. And does New American Funding expect you to sell your house with a certain amount of time, or do you pay like a certain percent of the purchase price so that they, to kind of like incent New American Funding to want to do that for you?
Yeah, for sure. So there is a convenience fee in using cash. That's 1.9% of the purchase price. Okay. So you basically, that gets financed in. So when we write the first purchase agreement, it'd be whatever terms that, you as a buyer come up with. So if you're like, I love this house and it's $300,000, well, then we write that purchase agreement for $300,000 on the closing date that you choose. Okay. But then when you go ahead and buy it from New American Funding, that 1.9%, which ends up being, what is that, $5,700, somewhere in there? Like yeah, somewhere in there. Then the new purchase agreement would be for $305,700.
Oh, okay.
You actually finance it in that way. And the idea is that we're not in the rental game. So you want to be able to, make that time period as short as possible if you can. So you would like to list your house after the new one is bought. You would like to list your house as soon as possible.
Mm-hmm.
Okay? Because there is a rent back period if you retain both residences at the same time. So I believe on a purchase price of $300,000, it ends up being about $64 a day for that rent back period. But the idea is that you're not paying for two mortgages at once, nor are you going to pay for rent and a mortgage at the same time. So while you're in title of your existing property, the one that you're selling, you only have to pay the mortgage on your existing property. Okay. But then after that property sells and you're going to go ahead and close on your new property, that rent back period, or that $63 a day, $64 a day, is then due. So if you use that for 10 days and it was $640, then that would come out of the proceeds of the sale of your house.
Oh, okay.
Yeah. So you're not doubling up, because we already know that moving's stressful in the first place. So we want to make sure that, you alleviate some of that stress as well.
Okay. That sounds like a great program.
Yeah. So it actually, the program came out because so many people were in multiples and they were bidding, above and beyond. But it actually has worked out so amazing for the retirement community, because people kind of get in that spot where they're like, I can't imagine packing up all my belongings one day and then moving into a new house that exact same day. Like, that's crazy, right?
Yeah.
And it's just hard and stressful. And so this is one way that you can just alleviate the pressure and the stress from that, and then buy the property that you actually want at the right price.
Yeah, definitely. Well, I've used that, not the NAF cash, but the idea of having time to move in with a number of clients, like who are coming out of rental agreements. So, and this is the cool thing about a mortgage. Like, for example, you close on your mortgage in August, your first payment is due in October. And so they can buy in August, don't have to pay till October. They pay their August and September rent. Then they got the mortgage, but they have August and September to move in, and they didn't have to race out of that place. And people love that when I share that with them. And they also get excited too, because it helps them realize that they can buy faster than they think they can too.
Yeah.
And it's not so stressful then, because if you're trying to meet that October date, well, then you're like, oh, I got to get something. And, it's just a lot more stressful versus, okay, I got a couple months wiggle room here. It's not going to cost me anymore. I can just get in and be calm and cool, collected, and maybe paint the walls. Like, I have a client that just did that recently, and that was pretty funny. They thought they'd go in and they'd paint all the walls themselves, and they're like, oh, this is a lot of work, and they hired somebody to do it, which is super cute. But that's okay. They thought that would be a good thing, and it just didn't end up being their thing, and so then they painted. But again, they didn't have to be out quickly where they were, because there's nothing worse than trying to paint the walls when you got stuff all around. It's just better if the place is empty, you can just go paint. So it works out a lot better.
Well, and I think that's, that's a great point, because when we think about buying a house and you're like, oh, like this whole process is stressful. If you find the right house and you're excited about it and you're excited to move in, it changes your whole demeanor on everything too, because you're like, now I already know where I'm going. And then that's it. So we've had people that have used this for like a rehab loan. So so essentially they go ahead, there's one couple that used it actually for about 3 months, which gets kind of kind of costly with the rent back period, but it really saved them a lot of money, because they had 2 small children and a dog. And so what they did is they went in and they took out all the cupboards, and they were able to paint and do new carpet and appliances. And then they were able to move their family in there without all the chaos of having little children running around when they're doing the rehab loan. And so it just worked out, just nice. And then they also painted their existing property, and I think they made about $25,000 more than they were expecting to on their existing property. And they said it was just super seamless and smooth.
Oh, that's awesome. Yeah. It's tricky to try and move with kids and a dog. We lived in downtown Minneapolis for a month with our dog in a hotel room when we built many years ago, and our house wasn't ready. I learned a valuable lesson about rent backs back then. And, so I wasn't an agent back then, didn't know how that whole thing worked. That, oh no, the builder will get it done on time. And so no, they weren't done on time. And we had to live down there for a month, and that was really tricky with the dog. Needed to run, or she needed to run. It was our girl dog back then. But you can do it. So that's great to know that's an option for people too. So how about any other fun success stories that you can share of people using this and it worked out really well for them? Either reverse mortgage or the NAF cash.
Yeah, so I've had 2 people use reverse mortgage where it saved them from going to a rental property.
Oh.
They were it got to a point where life was just too much. It's so expensive to have, and one of the ladies had a car payment. So that was like $300 a month. But by the time that she was using so she took her she used her Social Security. She paid her car payment. She had gas and groceries. And then when her mortgage was coming out, she had like $12 left for the month.
Oh,
so
wow.
It ended up being where she was just truly pinching pennies to try to get by. And she came to me and asked me like, a number of questions on this product. And she's like, I'm just so nervous and concerned. And I'm like, the only thing that you need to do is just have a conversation. It doesn't mean that you get pushed into any product. It just gives you options, and then you can understand it and make a good decision for yourself. Mm-hmm. So when the reverse team came in and talked to her about the different options that she had, she honestly was like glowing, because she goes, oh my gosh, I thought I was going to either lose my house or I was going to have to go to an apartment with more stairs. And her cat, she had a cat too. And she's like, my cat's the most important thing. And so she didn't want to move her cat because her cat was like 10 years old or something, and have her cat go to a different place. And so she ended up actually getting a payment of $1,100. So they were paying her out of her equity $1,100. So it was huge, because it solved so many problems for her at the same time. Mm-hmm.
Oh, that's awesome. What a great story.
Yeah. So I think that one was absolutely huge. With NapCash, I've had actually a number of people where they're very hesitant to downsize, like we've been talking about. But after they found the right property and were able to have this flexibility, they were like, it made all the sense in the world. We were going to be pushed into a condo. We were going to be pushed into, properties that we weren't really thinking are ideal, so we could line up the closings, because nobody would take her with their contingent offer. And then after they found out about this program, they're like, oh my gosh, we were able to go in with cash. So we were king in the market, get our offer accepted on the place that we really wanted, and then realized we could use this to our advantage of taking the time to move. It really made all the sense in the world. And so that was absolutely huge for them too.
Oh, that's wonderful. It's great to hear the success stories of people truly finding this product that meets their needs, because everybody's situation is different, and there isn't a one size fits all, and so there's options. And I think that mortgage companies actually have gotten a lot more creative in the last couple of years, since the whole thing of, the multiple offers and 30 offers at once, and you just had to come up with some things, but that gave more options to people to choose, how it works best for them to buy and sell a house.
Yeah. Absolutely. And there's a lot of people too that, they'll talk about payments and being in this higher interest rate environment. And there's also very creative products that come up with that same thing too, where like something that's called a 2-1 buy down, for instance, where it allows your payment to be 2% less for the first year and 1% less for the second year. So those payments that all of a sudden looks to be overwhelming can kind of come back and come into perspective and check, if you will. So that also, makes things more affordable and more obtainable. So it really just depends on, who the lender is that you're talking to, who the agent is that you're talking to. So like, Shari, you're so great at this. You always line people up, and you would know your options. You do your research. And that's what makes you wonderful, is that you have a lot of people in your pocket to help lead your clients to the right spot. And that's just it, is having a lender that takes time with you to explain those options, so that they really listen to what your goals are and where you want to be. And that will make your transaction so different, and the purchasing process so different in itself.
Yeah, absolutely. And I appreciate people like yourself who are really good at explaining to people, because it goes over my head. I am not a lender, and I stay in my lane as the realtor. And so I appreciate when you can explain it. And it's a lot. It's overwhelming. You start talking about all these different ideas, and people like the head spinning, they don't know which way is up. And so I appreciate people like yourself who can just get in there and lay it out for people on paper and talk it through with them until they get it. And nothing bad against them. They, we live and breathe this every day. This is something they run into once in many years. And then we can help them through that process and make it not so scary for them. So, yeah.
I love that. And I love it. It's nice sometimes to be like meet face to face and sit down, because numbers are a lot over the phone or, or live on camera. But sometimes when you put it on paper and you can actually see what those examples are, it makes a lot more sense, and you can feel more comfortable about it. And just listening to people's stories and understanding like where they're coming from and what their goals are, it all puts things in perspective. And oftentimes then you can figure out like what product does make the most sense and how to alleviate a lot of the stress from the transaction.
I think that's a really good point to talk about their situation. What are they trying to accomplish? What are their plans going forward? Because when you get to know the people and what problem they're solving for, you can come up with the solution that fits that for them. So that's great.
Yeah.
Love it. Well, any last thoughts you wanted to share with people?
No, I mean, the main thing is that everything starts with a conversation. Conversations are free, right? And sometimes we learn really simple things and, taking 5 or 10 minutes out of our day to just see what our options are. And I think that's exactly what we're here for. So that's what I'll leave you with.
Absolutely. Well, thank you so much, Olivia. I'll have your phone numbers right there, and I'll put more information for people to get in touch with you. But thank you so much for your time today. And I hope this was helpful for people. Have a wonderful day. Thank you, everybody.
Bye, guys.